Okay, recording. So, Nasdaq here for a bit of a review. I want this to be a bit brief, ideally 45 minutes to an hour maximum. Nasdaq previous week I was bullish, watching and expecting that price trades into the daily bullish fair value gap, and we see the rotation higher to take out the previous week's high, or as far as forex is concerned, the all-time highs. So we had the daily bullish order block there, pretty much overlapping with the fair value gap. So essentially a unicorn setup, essentially. So we were watching, expecting to see that could we dig in and then rotate higher. That was the expectation, that was the idea there. Price did close pretty heavy on Friday. It did close within Thursday's range, so it's indicating to me that potentially we could see a trade back into that fair value gap there. The way that third candle formed really does indicate that there is a high probability that we trade into that daily fair value gap. Yes, high probability that we trade into that, and high probability that the next day's candle is potentially bearish. So going into Monday, that's what I'm thinking, that's what I'm expecting, that we trade into the daily fair value gap and then potentially rotate higher for buy side target. That's at least the expectation for the week, the outline for the week. Noting or taking a look rather at the 4-hour chart, we would have noted a bullish order block there. We have a bullish order block pretty similar to what we were looking at on the daily chart. We have a 4-hour bullish order block, and we outline this little sliver right here because price has pretty much rebalanced this area. This is a balanced price range. You have the accumulation, aggressive out, aggressive in. You can see that on a lower time frame. Be much easier to see on a lower time frame, but yeah, accumulation, aggressive out, aggressive in. This is a balanced price range. Yes, this is a balanced price range, and if price is to trade into it, we would ideally expect it to go as low as the high of that candle there and then offer buying. So that was the idea. Trade into the daily fair value gap. We could go as low as the 4-hour fair value gap and then rotate higher. Going into the 1-hour time frame. Majority of this rotation lower has been annotated in the Discord, so please feel free to check that out. Really what I want to focus on is the buy side movement after the tag into the 4-hour bullish fair value gap. So we did trade into the daily fair value gap right here. This was at 4 o'clock UCT plus 2, or that would be 10 o'clock New York time. Somewhere in that 10 o'clock, that 10 a.m. candle, between 10 to 11, we traded into the daily bullish fair value gap. We swept the sell side liquidity, and then we saw the following candle, 11 o'clock candle, be a bullish candle. So I was looking, expecting buys, right, from the daily fair value gap. There's the potential for buying. However, with the way the next candle opened and rotated higher was indicating to me that, or rather it wasn't what I was looking for in price action. I wanted to see price sweep the previous candles low, the previous hourly candles low, and then we can look for the rotation higher. That's the typical or the reversal characteristics that I usually look for, and we didn't see that. So I watched price carefully analyzing, being patient, and just really at this time waited for New York PM session. I stepped outside of the market and went to do what I did and just simply waited for PM session. We were very close to lunch hour anyways, might as well. So price rotates higher, we see it open, push up, sweep previous candles high, and then we get a huge decline lower into the daily fair value gap, still with the bodies closing above consequent encouragement of the daily fair value gap. We also do have a 1 hour fair value gap in there. Really beautiful stuff, really pretty stuff. However, with the aggressive displacement through that candle's open, through that candle's low, we created a bearish order block on the hourly. We created a bearish order block on the hourly, and instantly to me I was looking at, okay, we do have this beautiful sell side liquidity, and we have that bullish 4 hour fair value gap that price can trade into. So if it is to trade into that, ideally I would like to see still the same pattern being maintained, where the bodies of the candle close above the consequent encouragement of the daily bullish fair value gap. So that would mean the wicks do the damage, sweep the lows, and then rotate higher. Exactly what I was looking for. That has been outlined on the Discord. Please feel free to check that out. That move lower has already been outlined. Please feel free to check that out. Now again, on the lower time frame, I'm gonna go right into a 1 minute chart. Okay, here we go, 1 minute chart. 1 minute chart. So 1 minute chart, this is 2030 here, and we have 2015 where? Here? Yep, there you go. So between 2015 and 2030, that is a 15-minute candle. So the high of that candle, let me do this. Great. The high of that candle would be there, the low of that candle would be, well, technically there, actually, sorry. The low of that candle would be there, because at 2030, that's the open of a new candle. So the high would be there, and there's the low of the 2030, or sorry, of the 2015 to 2030 15-minute candle. So that'd be the low of the candle. Can I just get the low? Alright, there you go, perfect. The low comes in at 22,587.8. 22,587.8. Perfect. Wow. I didn't expect that. Pretty cool. Anyways, we get the low of the candle there, and at the open of the new candle, the open of the 2030 to 2045 15-minute candle, we sweep the previous candle's low. We sweep the previous candle's low, and what do you know? First thing you see, we have a bearish fair value gap there. Bearish fair value gap there. Tiny little bullish fair value gap there. Anyways, we see the sweep of that low push higher, and we begin to see that once bearish fair value gap begin to act as an inversion fair value gap, supporting price, supporting buying of price. And that's also beautifully enough just above the upper quarter of the 4 hour bullish fair value gap. We begin seeing buying in price aggressively aggressive buy. We see price pushing higher, pushing higher, pushing higher to above till it takes the, or rather till it closes above the body of that candle there, that candle that started the initial move lower. So right at this level here, you would have your shift in market structure and a candle that you can begin to refer to as a bullish breaker or a bullish a bullish order block rather. Yeah, that could be your bullish order block, the series of down candles before the movement higher. So that would be your bullish order block there. Coincidentally enough, or consequently enough, that lines up pretty much with a bullish fair value gap just below that, and the, of course, bearish fair value gap there that we are actively now using as a inversion fair value gap and expecting to see it support price higher. So that overlapping with the bullish fair value gap, we are having two fair value gaps here overlapping, the inverted fair value gap as well as the bullish fair value gap. We are expecting sensitivity on that area, sensitivity in that price area, in that level, in that range, and that's exactly what we see. Price digs in once, digs in the second time, and aggressively pushes out right there, or you could use the high there, this level here. Really, you could, yeah, I just do that. That right there, after we pretty much close above that candle there, after we close above that candle, close above that high, that then becomes your, what I would look at as a propulsion block. There's absolutely no reason for price to trade lower than the low of the fair value gap there, or lower than the open of that candle there. So we're expecting buying in the upper portion, really even lower than the close of that candle. So yeah, nothing lower than 50% of this candle here. So we're expecting buying, and that's exactly what we get. Price begins to rotate higher, rotate higher, rotate higher, rotate higher, to sweep buy side. Simple short-term resting buy side right there. That would be your low-hanging fruit. There we go. That would be your low-hanging fruit as we trade into what was the first presented New York PM session fair value gap, if I'm not mistaken. Where's that there? Sorry, we're 730. There's 730, and that's the first fair value gap. Wow, would you look at that? And there we go. There we go. So short-term highs that were made during the, or that were made inside of the first presented fair value gap, PM session fair value gap, that we trade right into as our buy side, as our short-term buy side target. Of course, long-term we are aiming for the all-time highs as far as forex is concerned. So how would you position yourself for a long here? Already you're in here looking for longs, and you begin to see the signature where we sweep the previous candle's low, rotate higher, support there. So already we have two things happening. One, we've got the sweep of sell side. We've got to the support of buy side momentum, where the bearish fair value gap is now being used as a buying level. So we have inverted the bearish fair value gap and it's being used as a level of support. So two things have happened there, and then we rotate higher, trade right through that bearish fair value gap like nothing. Not expecting it to hold, not expecting it to provide any sort of or any form of resistance, because long term we are bullish. Long term we are bullish and we are reacting or trading off of a higher time frame bullish PD array. So bullish, and right here on that fair value gap there, formation of that fair value gap, stops down there. You could be in there looking for buys. Easy short-term target right there. In there looking for buys. You see that candle, the third candle there of the fair value gap. All these other candles. Why didn't you use all these other fair value gaps? Why didn't you use all these other fair value gaps? We have this bullish fair value gap here. The formation of that fair value gap, we see that price opened, traded into, and then pushed away from. The third formation of that fair value gap is what indicates or dictates whether price will trade into the fair value gap or not. So that third candlestick, the way it forms is very important. It forms as an up candle, having already dug into the previous candle a little bit into what seems to be the upper quarter and then pushed away from. Next thing, same thing happens in the next candle. Does not create the opportunity for bullish fair value gap to form. We push higher, and the third candle that's supposed to, or that creates the bullish fair value gap there, is an aggressive candle that pushes aggressively higher. So this breakaway fair value gaps. And then we have the third candle there forming. It forms as an inside candle closing within the previous candle's range, indicating to us that price will most likely, most probably, there is a high probability that price will trade into that bullish fair value gap, and that's the bullish fair value gap we're going to use to go higher. There we go. So you enter in there with your stops on the low of that candle, that would be there. 8-point stop. Easy targets, low hanging fruit. Buy side target, of course, that's buy side liquidity. None of all of this bearish fair value gaps mean nothing to us, because we are long-term bullish. We're long-term bullish, and price is rotating higher from a bullish fair value gap, 4-hour bullish fair value gap. So all these 1 minute bearish fair value gaps are just gonna be absolutely ran through. If anything, they can be used on a low time frame for areas to reaccumulate price. You see in here we had a little bit of a reaccumulation, if I would say, where the staircase price higher until the 2055 mark and then pushed higher. Very beautiful. I would have been in there definitely looking for more longs. That would have been my buy side move for the day in the PM session. Holding any longer, I would have definitely made an effort to hold longer to see if we would end up, if that would end up being the low of the week and we would end up touching our target. Of course I would have, and doing so I would have been stopped out. Holding for higher time frame moves definitely does require that you have your stop at a significant or a prominent swing low. You want to use a long term swing low, you don't want to use intermediate or short term swing lows because those are most likely gonna get ran out, to be honest. Yeah. So you wanna anchor your stop, probably taking a look at a 5 minute or 15-minute chart, anchoring it at a long term swing low. Yeah. Or higher time frame swing low, however you wanna term it or define it. Anyways, price then sees a rejection, comes back into the range, and we consolidate, push higher, consolidate, rotate back lower. We see price opens, new day opening gap. On the forex.com, it doesn't show the new day opening gaps or the new week opening gaps. It just kind of fills that price in with a candlestick, and yeah, I don't know why it does that. So that likely there is most likely your new day opening gap. It can be viewed on other brokers. You can see it clearly. Forex.com, I don't know why it doesn't, but it doesn't. So price then rotates lower, sweeps that sell side, finds buying support on that bullish, on that rather bearish fair value gap that is currently acting as an inverted level. We see then the push out of the push higher. This one I will journal. I'll journal that later. I need to annotate the chart, so I'll annotate that one later because I do want to take a look at it and add it to my collection. I do want to add it to my collection. The hourly chart. Yes. Yeah. Same thing here. Again, this is actually supposed to be a new week opening gap. Price closes there and opens up there. So there's that. It just kind of fills it in with this candlestick. Yeah, it looks like it's usually well, at least for this week, it's been we've been having price gapping higher, opening higher than the previous day's close. So anyways, price opens up higher, rotates lower into what looks like the lower quarter of that wick, that hourly wick. We begin to see the rotation higher. Where is 6 o'clock? There's 6 o'clock. There's 6 o'clock, 9 o'clock. Where am I? There's 9 o'clock also. So yeah, rotates lower. We begin seeing the push higher. Trades above that down candle there, which is then used as a bullish order block, overlapping with a bullish fair value gap there in Asia. Seems to love that candle. Rotate, we see, and then we see rotation higher. That candle there, that down candle there is a order block. Yes, it's a propulsion block, is what we expect to see it operate or being used as a propulsion block. Don't want to see it get below 50% of the body. Propulsion block. There you go. Okay, cool. Propulsion block, we see. I wouldn't be awake for any of this. Honestly speaking, I'm gonna wake up like here at 8. That's when I'm going to wake up and begin to watch price and read price, or maybe even like 7 actually. I'll wake up at 7 because 8 is the start of the London Open, or rather the London Kill Zone. It's the start of the London Kill Zone, 9 a.m. London Opens. Yeah, but that's when I'm gonna wake up, and when I wake up, we'll drop into a 5 minute shot. So this is what I'm waking up to see. Still flipping, trying to get my bearings waking up. Just brushed my teeth, did a few stretches, had a cup of water, did my morning meditation, and I sit down and oh, this is what I see on a 5 minute shot. Okay, looks like we're bullish. Fair value gap on a 5 minute there. Price dug into that. We saw the accumulation, sweep the short term low, still within the fair value gap. Beautiful. Beautiful. What an amazing trade. And then we rotate higher. Amazing trade that would have been. We rotate higher, sweep the New York PM session high. That's the New York PM open high there. That's the 7:30 candle, yes. 7:30 candle, dig into the upper portion of the 5 minute bearish fair value gap. Why is it? Okay. Of the 5 minute bearish fair value gap, we begin to see rotation lower, accumulation in here. There's the 6 o'clock candle. Again, we are bullish. We want to see the short-term high that be there nearest to the open, getting swept before the manipulation law. Ideally, 7 o'clock. 7 o'clock, I come into the charts. First thing I see is we are sweeping short-term lows, digging into the propulsion block on a hourly chart. Just note that as the 1 hour. Yeah, I'm thinking I'm typing, guess I'm not. There's the 1 hour propulsion block. Put that on the top, take it to the right, thank you. 1 hour propulsion block. Let me take a look at how much time. 20 minutes, okay, great. 1 hour propulsion block, price digs into that and aggressively pushes up. We can see how it swept the previous candle's low. Right there. Aggressively pushes out. Price closes above that down candle there. We have our bullish our bullish order block, our shift in market structure right there. What is that little thing? MSS. Thank you. Let's take it to like the right. Cool. Shift in market structure. Bullish order block. Price. Try to use that. We see the immediate support, that down candle there. Price trades above that down candle there. It does not get used as a propulsion block, but instead price rotates lower, sweeps the short-term low, digs into that order block there. That, or not really order block, I guess it would be more of a bullish breaker. Yeah, more of a bullish breaker, because we swept the low of that candle there. Orders. Do you want to look at the bodies? strictly the bodies, you would have seen that. Okay, we would have seen that price closed above the upper quarter of that bullish breaker. See the rotation higher, sweep that candle there. There's your order block, fair value gap. You get that displacement. Just trade it into. See the rotation higher, that order block there. Price closes above, uses a propulsion to sweep the high, pushes up, sweeps those highs, and then we get the aggressive move lower into, again, the fair value gap, into the bullish order block, or the unicorn, if you will, for those of you from X, into the unicorn bodies, staying within that. Let me see. Within that candle's range, stays just above the lower quarter of that bullish order block. See the push up, rejection. Price digs lower into that. Sweeps just below that candle. On a 1 minute chart, we could probably see there's an order block in here. I'm not gonna go that deep because really Tuesday was a really big consolidation day, and we did see that coming, considering that we are targeting buy side, and price did just come from an expansion phase. If you can look at the daily, price has been expanding, and we just made, again, I need to take a look at the chart. Yes, price has been expanding. We recently made a new high in the previous week. We just made a fair value gap, order block, and we are expecting continuation in that buying momentum. Again, however, we are at a point whereby it wouldn't be surprising to begin to see consolidation. Yes, not at all surprising to begin to see some form of consolidation. Yeah, seeing some form of consolidation. We have seen the idea from a weekly standpoint, again, still following the AMD concept, is accumulation, manipulation, and distribution. That's what we expect to see. We did see at the open and throughout Asia and London, we saw a lot of accumulation. We saw a lot of accumulation and some manipulation going into New York AM and New York PM session. We saw some manipulation, and we used Tuesday to re-accumulate our orders. Re-accumulate and allow smart money to accumulate in new buying orders, new buying momentum before the movement higher. I wasn't expecting for them to use the entire day, but watching and considering that there was no news Monday, Tuesday, and really all of Wednesday till 8 p.m., which was FOMC. This was during the New York PM session. it's not surprising that we had the consolidation that we did have on Tuesday. If there was news on Tuesday, however, I would have definitely expected to see that we potentially make a new low of the week and then begin distributing higher, or we trade into a higher time frame bullish PD array and then attack the highs. Yeah, that's what I would have been expecting if we had some news, but it was a bit of a lackluster week in terms of news. There wasn't really any much news. Even on Thursday, the news that we did have after FOMC was the 2:30 unemployment claims. Friday no news. So a bit of a lackluster week, but nothing wrong with that. We just simply had to be aware of that and aware that some of these days might just be choppy. Some of these days, one of these days might be a seek and destroy day. Yeah, a seek and destroy day. And that's pretty much what Tuesday was. Tuesday was a seek and destroy day. Seek and destroy day, rather. There we go. You can see that we had bullish fair value gaps being made that were then ran out, bearish fair value gaps being disrespected, bearish fair value gaps being made, price running out those older bullish fair value gaps from overnight session, sweeping sell side, creating buy side. We did even sweep that short-term buy side before running lower, created more buy side liquidity there, engineered in more buy side liquidity by accumulating and holding price within a range, rotated lower, sweeping over that short-term sell side, digging into that bullish fair value gap, so the rotation higher into bearish fair value gap. Just when they think that price is holding, it might be bullish. Manual intervention sweeps the previous 415 candle low, trades right back in, accumulates, hold price, creates a bullish fair value gap, sweeps the short-term highs, or that buy side that was engineered. However, you could see at all these times when we're sweeping buy side, sweep buy side there, sweep buy side there, we did fail to tag the London high. Very, very important to note. Rotate lower, absolutely disrespecting the bullish fair value gap, pulls back higher, trades into that candle there. We can definitely on a lower time frame find a bearish order block or a bearish fair value gap that price rejected from, rotated lower, creates another bearish fair value gap there. Again, just a lot of accumulation. Tuesday was really a seek and destroy day. There wasn't much to say about it. They definitely was a potential for some moves short term within there, but beyond that, there wasn't really anything to say about Tuesday, to be honest. Except the fact that the seek and destroy day was Tuesday, and it's done. You'll never see two seek and destroy days in 1 week. You'll never see more than one seek and destroy day in a single week. So we had it on Tuesday. We know that it's done. We are expecting then Wednesday to be the potential, or to be the day where we see rotation higher. Especially with FOMC coming out, you can definitely expect them to run price up and potentially tag our target during FOMC. Yeah, expecting a lot of liquidity to incoming there during FOMC. Mm, yeah, that was the short term buy that we outlined from there to the high and did continue a little bit higher, sweeping out the short term or intermediate term highs there. Came back down, you would have seen the absolutely trade through, price absolutely trade through, and you have what would be a bearish order block right there. When you could have been in there, you see price open, create the low, go higher, tag into that, and then reject lower, or yeah, reject and trade lower, open, trade lower. You could have there was some positions in there that you could have traded, to be fair. Like if you were really with it and you committed and you were aware Tuesday was a bit of a seek and destroy day and you want to be see money, take money, the nearest short term lows is kind of what you want to be targeting, or near short term PD arrays, opposing PD arrays is what you want to be targeting. There was definitely potential for you to get some moves anyhow. Yeah, me personally, I really would have been trading this day, so yeah, but that's just a me thing. Anyways, 9 a.m. would open, and then you see the decline there, rotation lower, bearish area gap absolutely disrespected, and then after sweeping the high, you'd see that bullish area gap get disrespected. It was really a seek and destroy day. I don't want to look at that. But the important thing, or the most noticeable thing about Tuesday, again, is that it was all really just consolidation, consolidation, consolidation. And we went into the new day consolidating. Even in Asia, we saw some consolidation, 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 consolidation. And to me, that's really just accumulation, 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 accumulation. After accumulation, what do we expect? Manipulation. And where's 6:30? 6:30? Oh, we're at 6 o'clock. 6 o'clock, we are long, looking for longs, and we want to see short term. Ideally, there's this thing that I've noticed in price action where we want to see the high, the short term high near or at the true day open get swept before the Judas swing lower when we are bullish. So when we're bullish, we know that we are expecting a Judas swing, and that Judas swing we expect it to be opposing the direction that we are going in, so that price action, so that smart money can trap in the retail traders and trap them in and use them as liquidity for them to place their positions in the opposite direction. Yeah. So that's what we expect. And that's pretty much what we got. We saw the sweep of short-term highs, those little short-term highs there, that little intermediate term high on a 5-minute chart gets swept. We rotate lower, and this movement here was our manipulation. This was our manipulation leg lower. And we were watching price, and we see the sweep of that low there, and price failed to sweep the New York AM low. Price fails to sweep the New York AM low, and we begin to see buying. We begin to see rotation higher in price. Where's 9 AM, 9 AM, 9 AM, 9 AM, 9 AM? Anyhow, we begin to see rotation higher and price. That's 8 a.m. Open 8 a.m. We see price trade through the bearish fair value gaps. Bearish fair value gap being used as support. We see the aggressive push higher, higher, higher to the open, and pretty much this is, I'd say, signatures, or it definitely has some similarity. There's elements here of certain setups that I like to use, that I like to look at. We have the expansion that creates a bullish fair value gap between 8:30 to 9:30. Between 8:30 to 9:30, we get that bullish fair value gap there being made. We have the accumulation or consolidation going into the new day. We have a sweep of short-term sell side. Like, a lot of these characteristics, or all these characteristics really are bullish characteristics in my eyes. And as price then begins to accumulate in here, accumulating, as they're really just kind of holding price in a bit of a range, they are allowing for us, the informed individuals, to begin to accumulate our orders in long. Alright, smart money, or rather retail, would probably be seeing this and thinking, oh, what you call it? It's a resistance level and price is gonna reject, because price has been here before and it's rejected. You see it traded up into this area, rejected, traded up into this area, rejected, traded up into this area, rejected. It's gonna reject. We're gonna keep shorting, and they want them to maintain that idea, to maintain that bias, and they just simply hold price, hold price, hold price. So this is the accumulation, manipulation, second stage accumulation and distribution. Yeah, accumulation, accumulation, manipulation, distribution. You can say that distribution. You can do that. Distribution, second stage accumulation, second stage distribution. There you go. Yeah. So I would say from here to here, you have that aggressive out, some bit of a consolidation in here. Could definitely see that on a 1 minute chart. And then consolidation, aggressive out, aggressive in, reaccumulating at that level there, buys, rotation higher. So yeah, that would be your bullish breaker right there. You could be in there looking for buys within that fair value gap. Within this fair value gap, stops, you can have them down there. Might have had my thing there. Okay, and stops down there. On a 1 minute chart, let's see on a 1 minute chart, because ideally I would have loved to long below true day. That's where the best entries are. Did I not? Did I? Okay. Okay. There we go. 1 minute chart. Look at that. Yep. See an accumulation. Wow. So 1 minute chart. This is what you would have seen. Price dig in. Sweep the short term low. Push higher. Short term low, push higher. Makes me wonder in here on the sub-second time frame, there's some sort of bullish PD array here on this candle there. We find support, we get the down candle there, traded above fair value gap, unicorn. Sorry. This is a unicorn. So you have the first buying indicator there, short-term sweep of sell side. So you got 1, 2, 3 indications of buying. That's simply just reversal characteristics. And then you have that down candle there, price pushes up, you expect to see it act as a propulsion block. That's on what is that? 815 candle. 823, we do have, what you call it, a macro from 8:30 to 9 o'clock. Beautiful macro. Yeah. Right around here, would have had the opportunity to enter in on this fair value gap, this inverted, what was used as an inverted fair value gap. This is price trading through and then digs in, and then away. So on a 5-minute chart, you could have been in there, entering, going long. On the lower time frame, you've already seen 1, 2, 3 reasons indicating why you should be going long. Yeah, so you see price trade through there, you see that, you see what looks like a little bit of a fair value gap there. The low comes in at 672.3, the high comes in at 672.1. Yeah, there's a little bit of a 2-tick bullish imbalance there. You could go in there long, stop somewhere down there, or really just in here at that level, stops down there below that candle, or below even that candle, and that would have been your first entry in on air or at 8:30. Okay. Yeah, even here, it's a good stop actually. 11 pips. I'll settle for 11. Ideally, like a 10 stop pip range. There we go. I'm gonna have to reduce that. 10 pip range, yeah. Below that low, I think that's fair. Pretty justified. In fact, the stop could have been down here. Even just simply from a 1 hour from a 1 minute rather perspective. From a 1 minute perspective, your stop would have been down there. You're catching your trade in after 8:30. So really on that candle there, as price digs in, there's your stop, 10 pip range. Yes, 8 pips even. How much? That would be 11 pips down here. Yeah, I'll stop there. 8.5 pips. 8.5 pip range, just below the low. Yeah, I like it. Just below the low, 8.5 pip range. You're targeting buy side. And here you have the opportunity to reaccumulate your orders. Reaccumulate. And target is up here. And you wait patiently. Would have been in at 8:37, ahead of the 9 a.m. London Open. Would have been exited at of FOMC. So yeah, fortunately for us, we would have seen the 9:30 open inject a lot of volatility, and we would have seen our movement higher taking us all the way into the skies for a 1:26 RR. Yeah, these are really beautiful shades. These are just one of those things that I have in the arsenal. You know, that's my 50 BMG right there. That's my 50 BMG. My um, high probability setup. Just pretty simple, pretty beautiful. Yeah, man. Because that was the target tagged, I'm gonna stop there for the day. I, mm, I think I will take a look at what happened in the following couple of days on Thursday and Friday. I will take a look at what happened on the following subsequent days, and I'll just annotate. I'll take screenshots and annotate those. I enjoyed recording. Until next time, stay safe.